Welcome back. Futures are indicating another major sell-off this morning, although we are off of the lows of the morning. Dow Industrial's down 771. The Nasdaq is down 402, and the S&P down 113. Panic following President Trump's tariff announcement. $6.5 trillion lost in market value Thursday and Friday alone. However, some developments over the weekend. The White House confirming more than 50 countries have reached out to the White House to begin trade talks with President Trump. The president commenting on the market pain yesterday. Watch.
I don't want anything to go down, but sometimes you have to take medicine to fix something. And we have such a horrible, we have been treated so badly by other countries because we had stupid leadership that allowed this to happen. Now we have hundreds of billions of dollars is pouring into our country. On a monthly basis, it's pouring, it's already started because I put tariffs on. And eventually it's going to straighten out and our country will be solid and strong again.
Meanwhile, billionaire hedge fund manager Bill Ackman posted this on X. The country is 100% behind the president, but urging Trump to call a 90-day timeout on tariffs to negotiate and resolve those unfair trade deals. Joining me now with more on that is Altimeter Capital founder, chairman, and CEO, Brad Gerstner. Brad, great to see you. Thank you so much for joining me this morning.
Well, great to be here. It's an auspicious early Monday morning here in California.
It sure is. Thanks for getting up early for us. But, of course, you're watching all of this and participating in this market. What is your reaction to what you're hearing from folks like Bill Ackman?
Well, listen, I think he starts off by saying most of us are supportive of the president's pro-business policies. Lower taxes, less regulation, pro-M&A, all of that is great. That's what people voted for. But they also voted for, remember, fair and reciprocal tariffs, right? Precision-guided tariffs, as you just heard from Senator Deb Fischer, to help out with the ethanol trade, for Nebraskans. And that's what we thought we were going to get. But when the president held up this poster board, these were not reciprocal tariffs, right? This is a Navarro nuclear-style attack on American business, and you see the reaction in global markets. And so I think that the president, in the course of time, as Bill suggests, is going to realize now that we have 50 countries that are calling into the United States looking to negotiate, we'll get to the negotiating table. That's what we need to do. That's what markets need to see. The markets need to be reminded that the president really does believe in reciprocal and fair tariffs, and he's not trying to unwind the entire global system of trade, which has worked really well for America. Remember, America is about 80% of the globe's market cap. Over the last 30 years, right, there are certainly things that need to be fixed, but over the last 30 years, our share of global wealth has gone up dramatically.
Yep. Brad, what would you think of a deal with one of our major trading partners in terms of the impact on markets? I mean, look, Netanyahu is going to be at the White House today. They're going to have a press conference in the afternoon. We may very well hear them say, OK, we're doing zero tariffs. We're taking it all down now that, we just did this deal. You heard what the Prime Minister of the UK said, right? OK, we may not like what Trump is doing, but this is what should be done because it's been unfair for so long. We heard from Vietnam. We're hearing from the White House saying it's 50 countries. What would be a market-moving event that would reverse this sentiment, do you think?
Really, it's just about the goals and objectives, Maria. The market, remember, the president took to the Rose Garden to announce the tariffs. And he started off by saying a 10% reciprocal tariff on countries because that is fair. And the market was actually up 1.5% in early response to the president's announcement. But when people started breaking down this, right? This is not even tariffs. This is a trade deficit. It adds up to over $1 trillion of new tariffs. The market can't bear that. American business can't bear that. It's a nuclear-style attack on global business. And so I think we need a framework. And the framework begins, just as you said, Maria, country by country. We have 50 countries who now want to negotiate. Great. The president was successful getting them to the table. He's the negotiator in chief. He wrote the art of the deal. Now let's get to the table and make deals. And I think if the market thought we had time, and that was the objective, and that's the key, that the objective is to get to these deals and truly get back to reciprocal tariffs, I think we have a clear path forward. Here's the danger in the interim. The danger in the interim is we're now entering a period, as Stan Druckenmiller and so many CEOs over the weekend said, of negative reflexivity. Credit markets are beginning to crack. And when that happens, we're on the verge of throwing the U.S. into a recession that you can't easily get out of. This is not just a little short-term medicine. You can't just push a button and magically this all resets. I was with over 100 CEOs this weekend at the Breakthrough Prize in Los Angeles, the biggest CEOs in all of technology. And I will tell you, every single one of them said business is slowing. Right, we're heading into very dangerous territory. Yeah. We were already beginning to slow. So I just think we can't overplay our hand here. If America is going to remain strong, we also have to, and be great again. We also have to remain rich and healthy from an economic perspective, and this puts that at risk.
So what do you think about the macro story then? I mean, J.P. Morgan CEO Jamie Dimon wrote about it in his annual letter. He's releasing it today. He says the recession risk remains in question in the annual letter to shareholders this morning, saying that the menu of tariffs will slow down growth. JPM raised their recession rate odds first to 40% to 60%, and then they said, well, we're now expecting 100% that we're going to get a recession. Nancy Lazard this morning in Piper Sandler's note writes this: the team flagged if the Liberation Day tariffs stay in place for at least the next 6 months, even if only 50% of the price shock showed through to the economy, U.S. real GDP is on track to decline 1% in both the second quarter and the third quarter, with unemployment climbing toward 5%. That's from Nancy Lazard. Treasury Secretary Scott Bessent rejecting that altogether. He said, we're not going to see a recession. He said it again yesterday. Same thing that he told me back in March. Watch this. Can you guarantee that we're not going to have a recession?
No reason we need to have a recession. Could we have a pause as we go from this incredible level of government spending, which is just unsustainable? If we had kept going the way we were, we would have been in a financial crisis. And President Trump has put the brakes on this. We are going to get this spending under control. We are going to bring manufacturing back home, and we are going to make the country more affordable for working Americans.
Brad, we're back at the lows of the morning. Brad, we're down 1,000 points right now on the Dow Industrials. Do you think earnings estimates are too high? Do you think the macro story, growth story, is in jeopardy?
The Navarro nuclear approach to tariffs is going to land us squarely in a recession. Scott Bessent knows it. He said it a year ago. The Trump tariff agenda should be a fully loaded gun, rarely discharged. Instead, we took out the bazooka. These are not reciprocal tariffs. This is a nuclear-style assault on global business, and it's going to land us in a recession. So the president needs to get to the negotiating table and give us time to get back to those precision-guided, fair tariffs that are going to keep this economy humming. I know he can do it.
Before you go, what are you doing at Altimeter? I mean, what are you doing? I mean, in terms of allocating capital right now?
Maria, we've been hedged up. We've had our lowest net exposure to stocks we've had in the history of Altimeter because it was well telegraphed these were coming. Now we would like to start buying, but on a morning like today, we can't start buying if I think we're going to continue with a nuclear-style tariff policy. I think there's a lot more that's going to break. Credit markets are going to break. Equity markets are going to break. And business is cascading slower. It's a very dangerous and precarious situation.
I think you're not unlike many others. You want to get in, but you're afraid to get in right now without deals on the table.
That's exactly right. Our job is to protect capital first and to make money second. And this morning, every single allocator of capital is protecting capital.
Brad, thank you so much. Great to have you this morning.